Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thanks for coming on today.
Thank you for having me today.
Well, with the coronavirus outbreak, Wall Street and other markets continue to see some big swings, the Dow falling by almost 1,000 points yet again. What's the story there?
Yes. As you said, Wall Street sold off on Thursday as volatility extended amid the growing anxiety over the impact of novel and fast-spreading coronavirus on global growth. If you look at the numbers that are coming out, it seems to be jumping for the rest of the world other than China, including Korea. Also for U.S., California and New York cases ramped up quite significantly. And most of the world are extending quarantines and travel restrictions amongst the countries. And because of this, the safe haven assets or the safety assets rallied, including the gold prices as well as the yield for the government bonds falling quite significantly. If you look at the government bond rate for U.S., even after a significant fall yesterday, it's falling again today. It's now down to 0.8% for 10 years government bond rates. Clearly, this has had a big implication for the overall U.S. equity market. Dow was down by 970 points or 3.6%. S&P was down by 3.4%. NASDAQ was down by about 3.1%. Clearly, there's a huge volatility remains. The VIX index is currently at around 40 level. This is a level that we haven't seen since the 2011 European sovereign debt crisis. Of course, the financial crisis that occurred in 2008, we did see that number go up to as high as 70, but that's not that case. But in any case, still, it is one of the highest level that we have seen in the last decade. The 2019, the crisis level, the people are concerned about the economic growth rate to the more of a longer term. At the current point in time, still people are expecting that this uncertainty will last for until probably second quarter of this year, hoping that the second half of this year will show recovery. But at this point in time, uncertainty still remains quite high, and that's why the volatility continues to remain.
Well, Korean stocks were sharply lower today, too. It seems this was at least in part because of the rising number of infections in the U.S. But tell us what happened today in the domestic markets.
Yes, as you said, the Kospi is down by more than 2% today, 2.16%. And also, Kosdaq was down 1.15%. Middle of the day, it did go down by as much as 2.5% for Kospi, and the Kosdaq was down as much as 1.8%. But it did recover slightly, and then it ended at that territories. Clearly, the reason for this is because of what you said. Global scale of pandemic is maybe happening, and that's why people are concerned. But also, the new patient numbers that we saw from Korea been falling, but recently of yesterday, it did rise by more than 500 cases. So that's putting some worry to the point that where the overall infection is not really dying out yet. So far, about 0.12% of populations were infected. If you remember the flu of 2013 and the SARS, and if you look at those numbers, much higher level of the infections occurred. So 2009 and 2010, the flu implication was 760,000 cases for Korea. So people are concerned about how fast this will rise for Korea. Overall, foreign investors were a net seller of the Korean equity market. Because of these uncertainties, foreign investors sold more than 251 billion worth of Korean equities.
Well, now, last month, the global credit ratings agency Standard & Poor's lowered its growth forecast for South Korea's economy this year to 1.6%. Now it's cut it again to 1.1%. Briefly, what's their reasoning there?
Well, I mean, clearly this is because of the coronavirus incident. I have said that 2% is very impossible to meet this year unless the BOK and the additional supplementary budget can be happening more aggressively. It seems that, unfortunately, Korean government seems to be very slow in terms of reacting to the current problems. Right now, all the resources are focused on trying to contain the disease. But in terms of the other policies, we feel that it is a very slow one. They should have lowered the interest rate, BOK, on the last month. But they did not, which is very unfortunate. And even after the U.S. lowered the interest rate by 50 basis points, they haven't come out with any emergency cuts yet. They're saying keep watching for it, and this is very unfortunate. All these things are happening to the pace where it's very likely that the growth rate will fall significantly from the last year's 2% territories. Particularly with this confirmed cases of 6,000 or more cases and the 42 deaths, and the new cases are rising at 500 to 700 every day, and obviously that is limiting the economic activity within Korea and domestic consumptions and goods and services. So we do need to see government coming out with much more ensured aggressive effort that we've seen from the Fed and the Bank of China. Clearly, we need a lot more aggressive measures from the government.
Well, we'll be watching to see if those materialize, but we'll have to leave it there for today, Mr. Yu. Thanks so much for sharing your insights. We appreciate it.
Thank you very much.